7 easy ways to start investing with little money. When you don't have a lot of money to invest, it's easy to feel overwhelmed by the prospect of making financial investments. You're in luck, though, if you're interested in beginning your investment career with a little sum of capital. Getting your feet wet in the world of investing is made easier by the abundance of choices you have. Beginning in the realm of business with a limited amount of capital need not be scary. You don't need to be a financial expert to get started investing, as there are a number of different ways to do so with a low initial investment amount. You don't need a lot of money to get started investing and build a secure financial future for yourself if you just take the time to conduct some research and identify yourself with the potential downsides. These 7 easy ways to start investing with little money will help you on your route to financial success, whether you're seeking low-cost investments or strategies to get started with no money. Number 1. Invest in cryptocurrencies. This is a relatively new form of financial activity, but it has the potential to generate big returns with a low initial investment. Cryptocurrencies are a form of digital currency that can be kept in a wallet that's also digital. You can make an investment in cryptocurrency with as little as $10, and there's a wide range of coins available for purchase. Because of the potential for prices to see significant movement, it is essential to conduct detailed study before making an investment. However, investors should be aware that there is also a considerable level of danger associated with cryptocurrency trading. You should never invest more money in cryptocurrencies than you can afford to lose, because there's a certain level of risk associated with doing so. Make sure you have a solid grasp of the underlying fundamentals of the asset, as well as the technology that underpins the cryptocurrency before you put any money into it. Do some research on the past results, read some white papers, and examine the current trends in the market. You must also grasp that many exchanges, wallets, and protocols that are used to trade, store, and safeguard digital assets. Cryptocurrencies can be profitable, but the market is uncertain. Thus, risk management and investment diversification are crucial. Never invest more than you can afford to lose in a single enterprise. Cryptocurrency investing might be smart if you have the right information and resources. Number 2. Invest in mutual funds. Let's start with a discussion on why mutual funds are a good investment option. An investor in a mutual fund pools their money with other investors to acquire a wide variety of securities. Stocks, bonds, and cash could all fall under this category. Investment in a mutual fund gives you access to a professionally managed portfolio, which can reduce your exposure to risk while expanding your potential returns. Mutual funds are also among the most cost-effective investments because, on average, the fees associated with investing in mutual funds are lower than the fees associated with investing in other forms of investments. Let's explore mutual fund investing basics right now. In the first place, you'll need to choose the type of mutual fund in which you'll put your money. Mutual funds can be broken down into several different groups, the most common of which being index funds, stock funds, and bond funds. To increase your chance of success, choose a fund that is appropriate for your individual goals and the amount of risk you're willing to face. Once you've settled on a particular type of mutual fund, you may next select specific funds within that mutual fund in which to invest. You can achieve this by learning as much as possible about the funds available to you, reading evaluations, and consulting with an investment professional. A fund's past performance, fees, and the manager's expert assessment should all be taken into account when making a final decision. Number 3. Invest in real estate. Investing in real estate is yet another fantastic opportunity for those with a limited amount of capital. Real estate investment trusts, commonly known as REITs, are businesses that hold and manage portfolios of real estate and allow investors to make investments in real estate through them. REITs normally involve a low level of risk and have the potential to create a consistent income through rental payments. It's also an excellent strategy to grow wealth. When compared to investing in a single piece of real estate, purchasing REITs through a brokerage account or mutual fund might be a good way to spread out the associated risks. Additionally, investing in real estate through crowdfunding platforms can provide a decent return on investment and make it possible for you to participate in the real estate market without having to put up a significant amount of money up front. You can gain not just from the rental income a property generates, but also from the appreciation in value of the property that occurs as a result of your investment in the property as a whole. Putting money into real estate can be an excellent strategy to augment one's income and accumulate wealth over the course of time. Number 4. Invest in a Roth IRA. Investing in a Roth Individual Retirement Account, or IRA, is a great way to save money for retirement. Individual retirement accounts allow you to save after-tax income in a tax-deferred retirement savings account. from which you can later withdraw funds tax-free. This makes them a great option for anyone setting up money for their golden years. You can contribute to a Roth IRA with money that has already been taxed, and then you won't have to pay taxes on the earnings when you withdraw the money. Therefore, unlike with a traditional IRA, you won't have to pay taxes on the withdrawal of the earnings. You have more control over your retirement funds since you can withdraw your first payments whenever you like, penalty-free. Ultimately, a Roth IRA is an excellent way to save for retirement. It allows you to invest after-tax dollars into an account that will grow tax-free, and you can withdraw the money without being subject to income tax. Plus, it provides you with more flexibility when it comes to withdrawals and a great way to diversify your retirement savings. Number 5. Invest in peer-to-peer lending. Innovative and decentralized in nature, peer-to-peer lending brings together individuals in need of financial assistance with those who can provide it. Borrowers are provided with access to loans at low interest rates, while investors are provided with the potential to make better returns than they can get from usual investments. This removes the need for an intermediary, such as a bank. Investors have the ability to choose which loans they want to engage in, as well as the amount of money they want to put in each loan. This gives investors the ability to diversify their investments. The rate of return on investments made through peer-to-peer lending are typically higher than the rate of return on traditional investments. This is due to the fact that the investors demand higher interest rates from borrowers as compensation for taking on a greater level of risk. Putting money into peer-to-peer lending generally involves a low level of risk and has the potential to produce returns that are higher than those generated by traditional investments. Additionally, getting started is not overly difficult because the majority of platforms have a low required initial investment amount. Having said that, participating in peer-to-peer lending is not without its share of potential dangers for investors. Either the borrower might not pay back the loan as agreed, or the value of the loan might go down as a result of shifts in the market. In general, peer-to-peer lending is an interesting new approach to invest money in the financial market. It provides the option to diversify investments, as well as the possibility of higher returns on investments. Before investing, however, potential investors have to do their homework on the dangers involved and have a clear idea of what they'll be getting themselves into. Number 6. Invest in a Robo advisor. Robo advisors are automated online financial advisors that provide individuals with financial advice by making use of algorithms and other technological advancements. They are gaining popularity because they provide individuals with an easy, low-cost, and convenient way to manage their finances without the need for the assistance of a human financial advisor. Robo advisors are software programs that are intended to make the process of investing simpler and more available to individuals who have limited understanding or time devoted to the financial markets. They start by determining a person's appetite for risk, goals, and objectives with the use of algorithms. After that, they give the individual customized advice and portfolio suggestions. In addition to this, they offer continuous monitoring as well as rebalancing of the portfolio. All of this is taken care of with very little participation from the investor, making it an attractive choice for people who lack the knowledge and/or time necessary to handle their own investments on their own. Robo-advisors are often a wonderful alternative for people who are working with a limited budget because they are significantly more cost-effective than traditional human advisors. The fees are often a very small percentage of what you would pay for a traditional advisor, and they can get as low as 0.25% in some cases. Because of this, it is an excellent choice for people who are interested in investing but do not have the financial means to hire a human advisor. Those who are limited financially or who do not have the time to handle their own finances may find that utilizing the services of a robo-advisor is an excellent choice. Number 7. Invest in yourself. Finally, one of the best investments you can make is in yourself. Investing in your own education and skills can help you increase your income and build wealth. You don't need to have a lot of money to invest in yourself. Investing in books, courses, or even coaching can help you to develop new skills and increase your earning potential. Reading books and taking courses in topics that interest you can help you to learn new things and stay informed about the latest industry trends. Additionally, investing in yourself can help you develop new skills such as leadership and communication, which can help you to become more marketable and open up new career opportunities. Lastly, investing in yourself can help you to increase your earning potential, as the more you know, the more you can charge for your services. Investing in yourself can be one of the best investments you can make, as it can help you to increase your knowledge, develop new skills, and open up new career opportunities that can help you to increase your income and build wealth. Thank you for watching our video today. We hope you found it interesting and informative. If you have any questions or comments, please feel free to leave them in the comments section below. We'd love to hear from you. Be sure to like, share, and subscribe to our channel for more videos like this one. Until next time, take care and have a great day.